War and energy are dominating headlines this week, and that is shaping the market in a big way. Some assets could offer real opportunity, while others may be worth ignoring altogether. Let's break that down where our focus should be in the week ahead. This video is for educational entertainment purposes only and should not be considered financial advice or a trade recommendation service. Any ideas shared here are simply my market views, and you remain fully responsible for your own trading decisions. Now that's out of the way, let's begin. So energy is one of the clearest themes in the market right now. The ongoing conflict involving Iran, US and Israel is causing continued disruption around the Strait of Hormuz. And this is keeping upward pressure on energy assets such as Brent and crude oil. This is one of the main drivers that traders are watching the market at the moment has broad implications across many other assets. Energy markets are particularly volatile because Trump's comments around Iran shifting expectations from one headline to the next. When he signaled a delay to possible strikes and pointed to talks, oil sold off sharply. But the market quickly picked back up, and there were doubts over the ceasefire and therefore no change to the Strait of Hormuz, and prices found support again. So right now, it's not only the underlying supply risk that matters, but also headline risk around the US messaging possible next steps. Within that space, heating oil has been one of the standout performers for some time, with gasoline also holding up well. What is becoming more noticeable now is the change in relationship between Brent and West Texas Intermediate. Brent, as the more globally traded seaborne crude benchmark, is starting to gain momentum relative to WTI as the market prices in the risk of supply disruption from the Strait of Hormuz. For now, there still does not appear to be a clear or lasting resolution to that, and so I don't see the situation changing anytime soon. And of course, we'll come to the charts in a moment and look at what this could mean in terms of opportunities for the week ahead. In terms of metals, the broader tone still looks weak overall. Palladium has been under the most pressure, and platinum has also been soft, while gold is showing more resilience, and there could be a counter trend opportunity on the chart, but we'll get to that in a minute. Equity indices are feeling the pressure mainly because of higher energy prices, raising inflation concerns and lower economic conditions due to the high price of oil, and this can feed into also bond markets. That has kept the tone weaker across many risk assets. Crypto has remained under pressure, continuing the softer trend we'd already been seeing. In terms of currencies, the US dollar has been firmer as safe haven demand increases, and higher risk currencies such as Australian dollar and New Zealand dollar have come under pressure. So the risk off tone is still very much part of the broader market picture. In the grain space, soybean oil continues to show relative strength, whilst the rest of the sector remains more mixed. Cocoa remains weak, and across a lot of the other commodity markets, there still is not a particularly clean trend at the moment, apart from soybean oil. So let's get to the chart. Here we have the weekly chart in gold. You can see that the last week we actually broke this low here, but we weren't able to close below that low. So that's a liquidity sweep of that low. And so where might we go next? We might go back up to this order block up here, and then we've also got this order flow here. Likely next week we're going to go back up and test this region. I suspect that the 50% fib is around there as well, so that would make a target for the up and coming week and potential sell back down. Then let's switch to the energy markets. So heating oil has been the strongest. You can see that on the monthly chart, we've got this very strong bullish candle up into this supply zone where we've been around for the last week or two. On the weekly chart, you can see here that we broke these levels here. We came down, retested them, and then we have been ranging for the past week. On the weekly chart, we tapped into this buy zone here earlier on in the week. So this was caused on Monday when Trump said that they were talking to the Iranians to arrange a ceasefire However, that has not materialized, and the market has got a lot of skepticism right now. Actually, if there's going to be any resolution, which I predict there will not for the short term anyway. So this is a key period for the energy markets. If we break this supply zone up here, then we are breakout to all-time highs, and the trend really doesn't have anything stopping it. It's either going to range and then break out, or we're going to range and then break down for potentially a 50% pullback to around here, and then potentially going up. If there's a complete ceasefire and the Iranians promise that they're not going to disrupt shipping, and then we start seeing ships moving through the Strait of Hormuz, then it's likely this is going to fall, but that seems quite unlikely at the moment. Okay, so going into the next week, we can use this as a buy zone because it's got a very small body. Then this is a potential sell zone as well. So we need to remain flexible to both scenarios. If we look down onto the 3-hour chart in these zones, we can identify potential order blocks that we could buy. So there's an order block here, and a bullish order block potentially here, there. And then on the 3-hour chart, you can see here that we've actually gone past what I thought was going to be the reaction point, which is this order flow here. And so we can move this up potentially to here. And so this is entering potential sell zone for a pullback around here. Then if we go to have a look at Brent, so the Brent chart is looking very similarly. We had entered this sell zone here, this supply zone, and we've been pushed back initially. So this is on a monthly chart. But if we look at the weekly chart here, then really this is a really nice bullish candle. So we closed the week near the high, and then we can take this as quite a bullish sign. We've got room up to this supply area up here, and so we may look for that as our target. Again, this is a potential sell zone, and then this is a buy zone here. So there could be opportunity at the start of the week if we sell off into this zone to look for an entry up. And then if we look at the 3-hour chart, we can see if there are any order blocks. You can see here, this was a sign of strength because we broke the Trump order block that was created here. And so this is a sign of strength. And then we've obviously got this sell zone up here. Any potential forward here, this is bullish order flow, potentially buy there. And then if it's a deeper pullback, then possibly we could buy one of these order blocks at the bottom. In terms of soybean oil, this is also a stronger asset. Zoom out, have a look. So this hit this supply order block up here on the monthly chart, and then we're seeing a reaction at this order flow zones over here, and then we're currently ranging. We have been supported by this high here, so this is bullish order flow, and you can see during the week we pulled back into this blue wick zone and then rallied up, and we're currently stuck between demand and supply zones here. And so we're just going to have to play the range until we break out either to the upside or the downside, because soybean oil is a commodity that's affected by oil, because diesel powered tractors farm the fields, and then the prices of oil affect the cost to produce this crop. Then potentially it can go in correlation with the oil price. Currently, the weekly candle had a sell-off here, and so we could look to buy a pullback into this area for potential breakouts up. And if we look up here, we've obviously tested this, so we could set this as our target for a potential trade. And then let's have a look at crypto. Bitcoin, we were following this. We hit this monthly order flow low. You can see here that this week we hit that and sold off. And here it is in more detail on the weekly chart. And so we had this purple candle going into the week. And we've tried to push up to that purple wick zone. We've not been able to. And we've been pushed down. Although we're currently ranging, this is the demand area that is currently holding in Bitcoin. but it can only hold so long. Let's see into the coming weeks. If oil keeps going up and equity markets sell off, we should get a risk-off move that will support a short crypto trade, and then this buy zone will fall, and then potentially we've got lower targets of around here, as well as this demand area here. Okay, so let's have a look at NQ. Clearly, on a monthly chart, we are selling off. We've got this strong bearish candle. We've got order flow here, as this could be a potential bounce area, and then within that order flow we've got an order block here as well, so that's going to hold price to some degree. On the weekly chart, we tapped into this bearish wick zone here. We're looking like the momentum's picking up in terms of bearishness, and then we could potentially look here. So this is the same order flow zone showing on the weekly chart. That's a potential area that we might fall to. So that's around 22.3098. And then if we fall even further, then this secondary order flow zone here is a secondary target. We were looking at Nikkei. So Nikkei, of course, Japan is more affected by oil because they get most of their oil imports from the Middle East. And so we were looking to short this market this week. A lot of the indices are looking like this. We're seeing these tapping into the purple bearish wick zones, but Nikkei is currently being supported here. Yeah, this is kind of order flow at the moment, and it's looking less bearish than some of the other indices. Finally, let's check out Norway 25. So this is an asset that is defying gravity at the moment when all other assets are falling over. Norway 25 keeps moving up. On the monthly chart, you can see they've had 4 very strong bullish months. It's going parabolic at the moment, so we should look out for the largest candle in an uptrend. So we should get a blow off top and then potentially look like gold. But let's see how that plays out. We are showing a wick zone on the weekly charts here. Next week we should see if that breaks. This is a strong bullish candle at the moment, so this potentially could look like it's going to break the top, but we should bear in mind that we may sell off into this bullish wick zone and then break. Let's see what happens next week. So cocoa is an interesting one, as it does seem to be pretty weak, but we were selling off quite strongly, but then we've kind of ranged for a little while, and now we're sort of turning bearish. In terms of monthly targets, if we look down here, we do have a wick zone there, potential order flow down there. So these could be areas for to target for a bounce. You can see here that we've been testing this order flow. This has been bearish order flow here and here, and then we're going to close out the monthly for the month of March soon, and then this will become a sell zone. And then on the weekly chart, we can look to sell this back down to these order blocks down here after this brief pause. Okay, so that's the markets for this week. Happy trading, everyone, and stay safe.